So this is part number 15 or 14. I keep forgetting the what part of this series I am in because I'm so much focused on the content and the delivery of the content that I tend to forget what part I am recording. But I can assure you that it is going in a serial order so that there are no gaps. You need to watch one part before you watch the next part. Okay. This is an important video. So here we are looking at the grade of the base. Why do we need to look at the grade of the base? Because the higher the quality of the base, higher is the probability of the breakout. Now, this is not something which I learned from William O'Neill. This is something that I have created from my experience. So I divide bases into these 5 parts. Okay. There is a mistake here. So, for example, see, A grade base means 0 to 10% correction from the 52-week high. Okay. So this is height of the base from the 52-week high to the bottom of the base. So for example, we looked at this chart of BHEL. So see, this is the 52-week high, right? And that's the low of the base. And here you have the blue shaded area, the stop loss range, and the green shaded area. So that's how the base looks like. So if I measure the height of this base from here till here, it's like 27.92%. Okay. That's the height that I'm talking about, measured from the 52-week high. Okay. And this same for daily and weekly chart. Okay. There's no difference. You can use this concept on the daily time frame swing and positional trade as well. So if the height is 0 to 10%, that's a A grade base. 10 to 20%, that is B grade base. 20 to 30, it is C grade. 30 to 40 is D grade, and anything above 40% is, so I will write here, more than. This microphone comes in between my eyes and my keyboard. Yeah. Yes. So 0 to 10, 10 to 20, 20 to 30, 30 to 40, and more than 40%. Okay. That's E grade base. Now, important thing for you to understand that just because the grade is poor doesn't mean the base is poor. See, I will explain this to you. Now that base BHEL was 27.92, right? So it's a C grade base. It comes between 20 and 30. It doesn't mean that it's a bad base. I will tell you the reason. Or poor base than A and B. I will tell you the reason. See, a normal correction in a stock is if it goes down 1 to 2.5 times the general market. So for example, if the general market is correcting by 10%, so let's say Nifty is correcting by 10%, and the stock corrects by, let's say, 10% or 25%. 10% correction means 1 times the general market correction. 25% correction means 2.5 times the general market correction. Correct? So if the market is falling, like Nifty is falling 10%, and the stock falls 10 to 25%, that height of the base, it is not a bad base. It is still acceptable. However, if Nifty falls like 5% and the stock is falling like 25%, that is 5 times. Okay, so that is not a good base. So whether a base is good, the height of the base is good quality, low quality, is based on general market correction. This I learned from William O'Neill. Okay, just because it is C grade, D grade doesn't mean that it's a poor base. Maybe it fell down that much because the general market itself was in a correction. So if the market falls like 5% and the stock falls like 25%, that is a more than 2.5 times the correction of the general market. That's a deeper correction. That's a poor base. So, two things you need to understand on a standalone basis without even looking at the market. The smaller the height of the base, the better it is on a standalone basis. Imagine we are not looking at the market. On a standalone basis, the lesser the correction, the lesser the height between 52-week high and the low, the better it is because the stock is not giving up on its previous prior gains, okay, on a standalone basis. But when you compare to the market, the situation might change. So I want you to look at every stock through the lens of the market as well. So in this case, so the stock fell from December 2022 till 27 February 2023. So you go to Nifty chart and you check from December 2022 to February 2023, what was the correction in the Nifty, or whether there was a correction in the Nifty. Sometimes what happens is the Nifty during this period, now I can't show you the chart because I am not allowed to show you the chart of Nifty with latest price data, but uh, assuming, let's say, the Nifty during this period, instead of falling, Nifty went up. Well, that's a poor relative strength, right? Even though it could be more than 70, but that is not what we expect, right? Now, this is 28% fall. Now, if the Nifty during that period fell by, let's say, 20%, okay, let's just assume 15-20%, then 27% fall is not a big deal, okay, because the stock did not fall as much as we expected it to fall. We expected it to fall 1 to 2.5 times of general market correction. So if the Nifty falls 10%, we would expect the stock to fall not more than 25%. If it falls more than 25%, which is 2.5 times general market correction, then there is a problem. Then it's a poor quality base. Then I might go in with a small position size. You understand what I'm saying? So on a standalone basis, the smaller the height, the better it is. Okay. But from a market point of view, you have to be careful. You watch the movement of the stock relative to the movement of the market during that period, and then accordingly decide the position size. Because the moment you look at the market, it's all about position size. Okay. It is not a question of whether you are buying or not, buying the stock or not. Of course, you are buying the stock. The only question is what position size. Sometimes you might decide that you want to take 0% position size. 0% position size means you are not buying the stock. See, for a lot of traders, it's a yes or no decision. For me, it is not a yes or no decision. For me, I'm asking, okay, if I were to buy this stock, how much risk am I taking here? Can I control that risk? Of course, I can control that risk. How can I control that risk? Small position size, tighter stop loss. Okay. So remember this base grade. Get to know what grade the base is in right now and check whether that grade of the base is it necessarily poor quality or the market itself made the stock to fall. Okay. Thank you so much. I will see you in the next part.